more than 257,000 Link left Binance, while Chainlink held a support zone that buyers have defended more than once. Chainlink Flow matters because exchange outflows can reduce immediate sell-side supply, but they do not prove a breakout by themselves. The useful question is whether the token can turn reduced exchange availability into a confirmed price shift. That makes the story a supply and structure test. Fewer tokens on an exchange may help, but the chart still has to prove demand at the levels that matter. That keeps the analysis grounded in observable levels. A wallet flow is helpful, but the defended zone gives the flow a price context. The outflow was valued around $2.45 million, and whale wallets also accumulated nearly 200,000 Link, valued around $1.8 million. Whale accumulation means larger wallets are adding exposure. It can be constructive, but it can also be positioning inside a range. The signal gets stronger only when it lines up with price structure. The wallet movement is useful as context, not as a standalone trade signal, because large holders can move tokens for custody, strategy, or internal positioning reasons. Custody movement can look bullish without proving intent. That is why the video avoids treating withdrawals as automatic bullish proof. Chainlink is trading around a base after an extended correction. The key demand zone is $9 to $9.05, where multiple attempts to break lower failed. Demand zone means buyers keep showing up in the same area. That does not guarantee upside, but it tells traders where the current defense is happening. A defended demand zone becomes more convincing when sellers repeatedly fail to push through it and buyers keep absorbing supply near the same price area. Repeated defense makes the support zone easier to validate. If buyers stop appearing there, the outflow narrative loses its strongest support. The Chainlink Flow setup becomes more interesting because the range is tightening. A descending trendline is still limiting upside, while support holds below. In easy English, price is being squeezed between sellers above and buyers below. When that compression breaks, volatility can expand in the direction of the break. Compression is valuable because it gives a clear map. Traders can watch one side give way instead of guessing from a wide and messy range. A tight range gives viewers a cleaner invalidation map. The squeeze also gives both bulls and bears a clear line to watch. The upside confirmation level is specific. A sustained move above roughly $11.05 to $12 would suggest the structure is changing. That could point toward the $15 to $16 supply zone from the current map. But without that move, the chart remains a base inside a broader correction, not a proven reversal. The phrase sustained move matters because a quick spike above resistance can trap late buyers if price falls back before the market accepts the higher range. Acceptance is stronger than a single intraday move. Fresh demand should show up in closes and volume, not only in brief wicks. The downside invalidation is just as clear. A breakdown below $9 would weaken the base and expose lower levels. That is why outflows alone are not enough. Tokens leaving an exchange may reduce near-term selling pressure, but price still has to hold the defended zone and clear resistance. That downside line keeps the analysis honest, because bullish wallet movement cannot protect the setup if the actual market structure breaks. The support break would override the outflow optimism. That keeps risk defined for viewers who follow support rather than rumors. For Chainlink Flow, the next signal is whether Link holds $9 during pressure and then breaks $12 with follow-through. Network activity and development metrics being stable helps the backdrop, but the tradable proof is still simple. Defended support, lower exchange supply, and a clean resistance break must line up. The strongest confirmation would combine continued exchange outflows, defended support, a resistance break, and volume that shows new buyers are participating rather than only old holders moving coins. Confirmation needs wallet flow and chart structure together. Together, those signals would show whether accumulation is becoming a market structure shift.